Welcome back to the Dividend Diplomat's YouTube channel. And today we're here to talk to you about 3 stocks that I'm watching now in the month of August 2020.
So get excited, everybody. Smash that subscribe button. Give us that thumbs up. Ring that little notification bell. Lanny found not 1, not 2, but 3 dividend stocks to keep an eye on during the month of August.
Got that right, Bert.
Yeah. So first, before we dive into the actual companies themselves, let's talk through this exercise that we do every month. Think about this. The name of the game is finding undervalued dividend growth stocks. Lanny, how do we find undervalued dividend growth stocks?
It all starts with the legendary Dividend Diplomat stock screener.
That's right, Lanny. The Dividend Diplomat's dividend stock screener uses 3 simple metrics to find undervalued dividend growth stocks. The metrics are PE ratio less than the S&P 500, dividend payout ratio less than 60%, and a history of increasing your dividend and a strong dividend growth rate.
Now, with the 3 stocks to buy, or 3 stocks I'm watching here in the August of 2020, I put these 3 through the ringer. I put them through the Dividend Diplomat stock screener, not really to see, okay, do they fit the criteria, but what does their criteria look like and why they are on my list for August 2020 for stocks to buy.
Yeah, I'm excited. I can't wait. I know the 3 stocks, everyone, and I'm excited for you to see them and learn about them because they are some great dividend growth stocks.
Now, and again, to remind you, we invest in dividend growth stocks because we like to use that dividend income as our primary source of passive income in our journey to financial freedom, because it happens automatically. You invest in good, reliable companies, and third, the taxation is actually very good.
Yeah.
From a financial statement standpoint, which, we even put a video out of what is the difference between making $50,000 in wages versus $50,000 in dividend income.
Yeah, that was our very first Battle Royale article, and obviously we're dividend investors, so you should know who already came out on top. But if you didn't, check the video out for yourself. Spoiler, it's dividend income. Dividend income's always more tax efficient.
Right. Now, the stock market has been on an absolute tear since that end of March. And I feel like each and every month, April, May, June, July, it has gotten harder and harder to find those undervalued dividend stocks as the news continues to come out with high unemployment. The COVID-19 or coronavirus outbreaks are surging in unprecedented numbers, record numbers almost every day. I know where we live, we're in a red zone right now where masks obviously are mandatory. So as all this negative news is happening, the stock market continues to rise.
Yeah, it's a trend that you're not expecting to see, but when you start to peel back and learn why, it's pretty easy to see that there's a lot of cash that's still getting pumped into the market. The Federal Reserve continues to use all of their programs and use their balance sheet to the fullest ability to ensure that the stock market continues to receive that influx of capital and to help kind of prop up some of these stock prices.
Now, even with the increase in the pricing of the market, using our Dividend Diplomat stock screener, you can always find, for lack of a better way to say it, a diamond in the rough or some undervalued dividend stock opportunities. So I'm here to talk to you about the 3 that I'm watching and 3 stocks that potentially you could buy now.
Lanny, so I think I know what's next. Let's just dive right in. You want to tell us about the first stock on your watch list?
Archer Daniels Midland, ticker symbol ADM. Fairly large company, and I know the question first is, well, what do they do? Well, they're involved in the processing of primarily your food. I call this like a food stock. With your grains and other sort of minerals that are used in making food as well as in providing this type of food. And Archer Daniels is a dividend aristocrat. What does that mean?
That is a company that's increased their dividend for 25 plus consecutive years. Some dividend royalty.
That's right. So when we go into the Dividend Diplomat stock screener on ADM, you'll notice that their price to earnings ratio is below 13. I mean, that's a sign right there that they're undervalued comparative to the S&P 500 as a whole, which is around 20 to 22, depending on which day of the week that you're looking at.
Yeah.
Secondly, when you go into the dividend payout ratio, which is really, you want to see what that safety is of the current dividend as well as do they still have the ability to increase the dividend? Well, ADM doesn't fail here, and their dividend payout ratio is below 50%.
That's perfect. That is right in our sweet spot. Typically, when we're looking for payout ratio, we call it that sweet spot is the 40% to 60% payout ratio range, because that shows that you're paying a strong dividend to your shareholders, but you're not sacrificing the future of the company. You're still reinvesting some of those earnings into the company. So it's nice to see that ADM falls right into that spot.
Right in that home run spot where you can just smack one over that center field wall. Thank God baseball's back.
Yeah, it brought a smile to my face watching opening day.
That's right. Now then, getting into the third metric, dividend growth. ADM again passes with flying colors here.
Yep.
We've already said that they're a dividend aristocrat, but how would you like a dividend aristocrat that has not just increased dividends for 25 years, but 45 years? Yeah, Bert's head's blowing off right there.
I mean, one point I want to bring up about ADM too, we always talk about why we look for these long-term dividend histories as well, because we want to see companies that have increased their dividend through poor economic cycles and great economic cycles. You see the balance. And I think one thing specifically to ADM that jumps out to me was 2019 was a pretty rough year for ADM. They were in the middle of the US and China trade war. China buys a lot of ADM's products, and as prices were fluctuating, China was potentially looking elsewhere to source a lot. It had a lot of negative impact on ADM and their future earnings outlooks, but still, throughout all of that, they still managed to increase their dividend. And as things settle down, business comes back to the normal course of business. You'll see that the company is continuing to earning and will continue increasing their dividend as you'd expect. So to me, it was huge seeing them still increasing their dividend during this time.
Right, so their average growth rate is going to be in that 2 to 6% range, and I would actually anticipate somewhere in that 2 to 3% range for the foreseeable future due to the pandemic.
Yeah, I think that's great. I can easily see why ADM made it onto your watch list. So I think now let's ask you, Lanny, the second company on your list. This one was one that made me smile. It was a little bit of a surprise for me to see it on your list given the performance of the sector. So why don't you tell us about company number 2?
Sector number 2, or stock number 2 in my stocks to buy, comes in with technology, and that's with Cisco. Ticker symbol CSCO. And what does Cisco do? Well, if you can't remember my stocks to buy in a post-pandemic world, definitely check that out. But Cisco is, a big provider in your network capabilities as well as video conferencing solution, primarily your WebEx application, and not Bert's Zoom bombing of him on the toilet seat flushing in the background.
See, it's funny. Cisco figured that out, but Zoom still working on it.
Right. So Cisco obviously is huge in the tech arena, and kind of what Bert was saying, that he was surprised to see this on his list because the tech industry has been on an absolute tear.
I mean, think about this, Lanny.
Companies here.
Yeah, let's think about this. We got your Tesla, you got your Googles, you've got your Apple, all of these technology companies. Obviously, joking, those don't pay a dividend, but other technology companies like your Microsoft, your Intel sends before this last earnings release where their price fell, they were all on a tear. So that's why I was a little shocked to see Cisco on the list.
Right, so when you push Cisco through the Dividend Diplomat stock screener, you'll notice that their metrics stack up pretty well as a dividend investor. Their price to earnings ratio is fairly low. It's going to be below 15, which completely destroys a lot of the competition in the arena, especially if you compare them from apples to apples to, well, there's not really a company that does a pure apples to apples approach, but they're fairly low comparative to their competition, such as Microsoft or Zoom. Their dividend payout ratio, again, is fairly solid and is really in that smack dead middle at around, just below 50%. So, yeah, there goes Bert swinging one over the fences. So their dividend safety there is, fairly solid, and you could predict and expect dividend increases going forward.
Mm-hmm. Now, here's the question. Are they a dividend aristocrat like ADM?
They are not. So just because they're not a dividend aristocrat doesn't mean that we won't look at them.
Yeah, I think that's actually a very important point, Lanny. Not every company is a dividend aristocrat. If they were, it would take a little bit of meaning away from the group.
Right. And I mean, you don't want to not consider, certain companies. And because dividend aristocrats is such a small, finite group, they obviously have to start from not being a dividend aristocrat to being one.
Right.
So Cisco has around 9 years of consecutive dividend increases. So they're in their, not infancy, but they're in that medium, level, almost hitting that halfway point to being a dividend aristocrat. And luckily, they already grew their dividend this year. So in terms of dividend growth rate as the third metric, they have it. It's fairly sound. It wasn't as strong in 2020, but at least their dividend increase is out of the way. And similar to ADM, I would anticipate lower dividend growth rate for at least a year or two going forward.
Yeah, fantastic. So I think, hey, let's dive into company number 3. We've hit the food sector with ADM. We've hit technology. Let's throw a real curveball at you and head towards the tobacco sector. Lanny, what's company number 3 on your watch list?
Right, so yeah, that third stock is Philip Morris, ticker symbol PM. This doesn't really need much of an introduction.
No.
Have you heard of Marlboro cigarettes?
Yes.
So that is going to be the tobacco industry here. You know, Philip Morris is a beast of the industry, and they obviously are also investing heavily in their new, heating tobacco product line as well, which is continuing to grow revenue year after year.
Yeah, that's an advantage that a lot of these large tobacco companies have with their cash positions and their balance sheets there. Obviously, as the tobacco sector transitions into the heated tobacco, as Lanny was saying, they have the ability to invest in the new companies that they want to, or spend the money and engage in the R&D themselves to figure it out.
And Philip Morris was actually a spin-off between a massive company with Altria Group, ticker symbol MO. And at one point, I think they had Kraft in the mix. So in 2008, there was a huge spin-off, and they kind of broke off into separate entities. So Philip Morris, obviously has taken the Marlboro brand and a few other smaller brands that they have with them. So from a price to earnings standpoint, as we get in the Dividend Diplomat stock screener, it's below 14 at current prices, which again shows signs of undervaluation. Pretty similar to Cisco and ADM, and below the S&P 500. Going right into the second DD stock screening metric is the dividend payout ratio. Now this is where you may be confused.
Yeah, I mean, we typically look for 60% payout ratio or less. So why did Philip Morris make your list, Lanny?
Well, Philip Morris's payout ratio based on forward earnings right now is at 85%.
Yeah, I think an important thing too is we always caveat, we mentioned it in our dividend payout ratio video, there are some sectors that have typically higher payout ratios. So the 60% is our great benchmark. It's a rule of thumb. It covers probably 90 to 95% of the companies we're searching through. But sometimes you have to take a look at a company and make sure that they're in line with their industry and see why the industry may be paying out. And you know what, that's okay as well.
Right. And typically you can also look at other metrics within the industry. They like to look at free cash flow or operating cash flow.
That's a great point.
And that percentage is far lower, I think in the low 70% range. But still, their dividend payout ratio is high.
Yeah. And
it is above our metric. Going into that third Dividend Diplomat stock screening metric of dividend growth, since that spin-off in 2008, they've consistently raised the dividend every year. So they're currently on a 12-year streak right now. So they're right in the middle of trying to get to that dividend aristocrat status. Now, usually, the growth rate is low because guess what? Philip Morris's dividend yield is currently over 6%. So, it's like a seesaw. The higher the yield, the lower expected growth. The lower the yield, the higher the expected growth. So I wouldn't anticipate more than a 1 to 2% dividend growth rate for Philip Morris this year in 2020 and going forward.
Yeah, no, I think that's fair. And again, thanks for sharing this with us, Lanny. So let's summarize this. Let's bring it home quickly. Let's round third. Let's head home. We find our dividend stocks using the Dividend Diplomat stock screener and our 3 simple metrics to find undervalued dividend growth stocks. Lanny performed this for the month of August, and he found 3 companies on his watch list: Daniels Midland, Cisco Systems, and Philip Morris.
Right, so that's 3 dividend stocks that I'm looking at right now in August of 2020. You consider buying them for your dividend growth portfolio. They all have consistently increased their dividend, as well as show signs of undervaluation. Yep. If there are any questions or feedback you have, definitely leave them below in the description. We'll leave plenty of links to our articles on our blog page, as well as videos that we've already recorded for reference points.
Yeah. This is Lanny and Bert from the Dividend Diplomat. Over and out.